Hi, my name's Chen. I'm here at the 2026 Berkshire Hathaway annual meeting in Omaha. I'm here with Whitney. Thank you so much for your time, for being here.
My pleasure.
Can you first introduce yourself a little bit, like what's your background, what you do, please?
Sure. My name's Whitney Tilson. I'm in the investing business, ran a hedge fund for 18 years, and now I publish investment newsletters for a company called Stansberry Research. And I'm a value investor, a follower of Buffett and Munger. This is my 27th Berkshire Hathaway annual meeting. And I was one of the authors of the book Poor Charlie's Almanac about Charlie Munger, a well-known Buffettologist as well. So I'm an obsessive follower of Buffett and Munger and a practitioner of value investing.
So you said you've been at the annual meeting for 27 times.
Yes.
So this year, one of the biggest change is Warren Buffett stepping out and then Greg Alpert stepping in.
Yes.
So what do you think is the biggest difference compared last year and this year?
Well, I must say, I missed having Buffett up there on stage, and I missed Charlie, of course, who passed away a few years ago. The meeting with Warren and Charlie was sort of a mix of business, but also life advice and how to lead a happy life and marry a good person and be a good father and things like that. And that was very meaningful to me and the people who were there. But of course, Greg Abel can't be that person, right? So we got the business side, but not the personal stuff. So it wasn't as rewarding. But, we had decades of Warren and Charlie, eventually we knew that, it would move on to the next generation of management. So I was very impressed with Greg Abel as a business person. I think he's going to do great things as the CEO of Berkshire. I think they made a great hire there. But I will say the annual meeting, Greg Abel can never fill Warren Buffett's shoes holistically. I think he can fill his shoes as a business person, as a manager.
Mm-hmm. So continue with the topic. So Buffett once said that he trusts Greg Abel with his capital over anyone. Do you sort of agree with what Buffett was saying, or do you want to see that Greg Abel's kind of have his proven over time?
I have absolute confidence that Buffett and Munger picked the right person because this is the most important decision that they ever have made, and they've been mostly. As two of the most successful investors of all time, they've obviously made a lot of great investment decisions, have great judgment, and so I trust them. I don't know Greg as well. I don't know him personally the way I knew Buffett and Munger, and I don't know his track record as well. There haven't been books written about him, right? Mm-hmm. So I like what I have seen and heard from him, mm-hmm. both today and in the past. Mm-hmm. I have complete trust that Buffett and Munger have made a good judgment, and I give them the benefit of the doubt. But yes, there is an element, I think, for all Berkshire shareholders that they will need to see. But what I've seen so far, a very strong first quarter, renewing the stock buyback, the way he talks about the things he's going to do to improve Geico, to improve the utilities business, to improve the railroad business, I think there's going to be a lot of low-hanging fruit. Buffett, by his own admission, did not manage Berkshire very aggressively. And that has its benefits, but I think having Greg Abel come in, he's going to be able to really make Berkshire perform even better.
Gotcha. So as an investor yourself, what kind of fields or industry are you most interested in investing right now in the year of 2026 with all sorts of uncertainties going on?
Yeah, well, I'm a value investor, so I'm naturally drawn to beaten up industries and sectors, and there aren't that many because the stock market's at an all-time high. Both the NASDAQ and the S&P this week hit all-time highs. But there are plenty of beaten up out of favor sectors, two I would cite. And obviously I look for sectors with high quality businesses, strong brand names, strong cash flow, strong balance sheets. I'm a Buffett Munger guy, right?
Yep.
So I would characterize the software business, the whole SaaS-pocalypse, where some of the incredible businesses, Salesforce.com, Intuit, ServiceNow. You go down the list, software companies are down 50% or more. And so I've definitely been looking for value in that sector where AI is not going to put them out of business. So, but it's very difficult to make the judgments. Which businesses are going to be impaired by AI versus which businesses will be able to weather the AI threat and even benefit from it. The people who figure out those questions are going to make a lot of money. The second sector I've been looking at closely is luxury goods, brand names, Prada, Diageo, Brown-Forman, maker of whiskeys and brand name wine, whiskeys, high-end LVMH, Hermes, those kind of companies. They are being hit by the Iran war, a slowdown in their China business, and so that's another sector where I think Diageo and Prada, for example, are super interesting here.
Since you talk about AI, we got to turn off topic to the AI, right? So nowadays you see a lot of not only investment, but all kind of subjects now using AI. AI is blooming over the years. So what do you think about data analysis, or how does that influence and the use of AI have influenced the decision of the investors? Do you think that they trust what the data or what the AI is telling them, or do you have second thoughts, or do you think that they should cross-check all the information on the website?
AI, well, there are two, if you categorize AI is one more step in the tool for quantitative investors who are basically using supercomputers and that kind of thing, and that's not my area, but I have no doubt that AI will make those models even more sophisticated, which generally will make traditional investing, fundamental investing, what I do, more difficult because the machines are getting smarter. That said, AI is a very valuable tool for me. I use it at doing research, but I'm still doing my own fundamental analysis. And I think there are only two ways to win as an investor. And by the way, the vast majority of people should just own an index fund or an international index fund and maybe the S&P 500 or something. But just low fee, match the market, and spend your time elsewhere. That's the right answer for most people. If you want to beat the market, there are two ways to do it. One is to have a supercomputer and make 1 million trades a day, or don't use computers, basically, other than as a research tool, but basically own 10 or 12 stocks and make 1 trade a year. Only swap out 1 stock a year. In other words, all the supercomputers and all the investors in the market are thinking very short term. The advantage of index funds is if you think about it, they're buy and hold investors, right?
Yeah.
If you want to beat the index fund, you have to have an even longer time horizon and just focus on quality businesses. And I would argue Berkshire Hathaway today would be one of my 10 or 12 stocks.
Gotcha.
I think the stock is trading at a 12% discount to intrinsic value. And I think Greg Abel's going to be able to do some smart things to grow profits nicely. And so, Berkshire, I'd put Berkshire on that list today. The stock has really underperformed over the past year, and that's created a buying opportunity.
Gotcha. Let me go back to the meeting today. So I noticed Greg Abel has frequently used the word patient with investment. So as an investor yourself, what do you think what the word patience means to you as in terms of investor?
Well, I just think, he's talking about what I was just talking about, which is you have to extend, if you want to do better than average, I think the way to do it is to extend your time horizon and to not think short term and trading and so forth. And so I think he's also recognizing, improving Berkshire's operations, improving Burlington Northern, for example. He's telling shareholders it's just going to take time, because these are enormous businesses, and he's not just going to come in and start firing everybody. So I think he's preaching the same gospel that Buffett and Munger have been preaching for 50 years. Long-term orientation, focusing on quality companies, and letting the miracle of compounding work for you.
Gotcha. So one last question. In the year of 2026, what is one piece of advice that you will give the young investors out there?
It's a ferociously competitive world, and AI is now a new competitor for you. It used to just be other smart, hungry people. So I've got 3 daughters now, just turned 30, 27, about to turn 24. And the advice I've given them is You better be focused, not wasting hours a day on TikTok and social media. Go get credentialed, go to a good school, work hard, get a good degree and all, and then move to a big city where there's dynamism, lots of other young people. My daughters grew up in New York. I've lived in New York for 32 years, so my daughters have only known New York. They all went away to college, but they've all come back to New York City. But there are a handful of cities where you can, you don't want to be doing work from home as a young person.
Yep.
You want to be in the office with people.
Hands-on things.
And getting mentoring, developing mentors and all. When you get to be my age, okay, you can work from afar, right? And look to build a career and develop mentors and be the first person in the office and the last person to leave. And because it's a competitive world out there, and if you're not going to get displaced by another young, hungry person or by AI, you've got to differentiate yourself and develop real valuable skills.
Well, thank you so much for your time, Whitney, for this time. Appreciate it.
My pleasure.
Thank you.